Hello, everyone, and welcome to our show today. Today, we are going to be running through in a short of a period of time as I can, exactly how you could build business credit to a point where you can get a $10,000 or multiple $10,000 credit cards without a personal guarantee or without a personal credit check. So I'm glad you could join us today. So first, before we dive in, let me introduce myself. My name is Ty Crandall, and I'm actually the CEO here at Credit Suite. What we do is we help business owners obtain money and corporate credit. We also help companies offer business credit and financing as a service. So if we could ever help you in those areas, please let us know. This webinar won't have any kind of sales pitch. There's nothing going to be sold. There's our phone number, 877-600-2487. If we could be of any assistance to you, feel free to give us a ring at that number or just email us, info@creditsuite.com. Info@creditsuite.com. You'll see that we are diligent to make sure that all inquiries are answered. And also, I put a link up that I will also be putting up on the last slide, a free resource. If you're interested in building your business credit, you're probably going to like this checklist that we put together. It's creditsuite.com is our website, creditsuite.com, and it's /business credit building checklist. I know that's long, so that's why I'm saying it. So you can write it down. It's creditsuite.com /business credit building checklist. This is a really cool checklist I put together that allows you to go through and check off your steps of the business credit building process to make sure that you've met each step so you could be successful. So again, that resource is creditsuite.com /business credit building checklist. So that being said, today I want to jump in and walk you through the process of getting to really the holy grail of business credit, which are, cash credit cards, $5, $10, $15,000 cash limit credit cards that don't require a personal credit check and don't require a personal guarantee. Now, keep in mind, I'm trying to keep this show as short as possible. Today's probably going to be under 40 minutes, 30, 35 minutes, somewhere in that realm. There's a lot of information on my iTunes channel and also my YouTube channel with really in-depth information of the different aspects of this process. So we might talk about building your credibility. Well, you can easily go to one of my channels and get really in-depth videos on that if you don't feel you're getting enough information here. This is just kind of an expedited walk through the process of building business credit to the actual end goal of getting cash credit. So let's talk a little bit about business credit. Now, you're obviously familiar with consumer credit, right? This is credit that's linked to you personally based on your social security number. Well, business credit's another type of available credit for business owners, but with business credit, it's actually not linked to you personally. It's linked to your business based on your EIN. So just as you have a social security number, your business has an EIN number. And just like you can build credit for your social security number, your business can also build credit for its EIN number. Okay, now again, one thing to know early on is when you're born, you're given a social security number, but you don't automatically have credit. You have to build credit even though you have a social. It's exactly the same in the business world. When you set up an entity, you're given an EIN number by the IRS. That doesn't mean you get credit with it. It just means that you have an EIN that you can build credit for, the same as you have a social that you could build credit for. So that's an important part that I wanted, important point that I wanted to bring up. So EIN credit gives you literally just a tremendous amount of benefits. One being that you could build it very quickly, getting approved for vendor credit right away, store credit at stores, major stores within 90 days, and cash credit, like the end goal that we're going to talk about today, within about 6 months or less. This honestly is one of the reasons that I personally love business credit so much. We deal with a lot of entrepreneurs that have credit problems. A lot of them are starting businesses with credit issues. A lot of them have existing issues or existing businesses with credit issues. And the credit issues have prevented them from getting business credit. Now, that's not the only reason to build business credit, as you'll see, but that's a common occurrence we run into. So what happens there is these people want money fast. They want money really quickly. And in those cases, business credit usually is the absolute best and fastest option. If you don't have cash flow and you don't have, collateral and you have credit issues, you're not going to get money right away. But business credit is the fastest solution because you can go from no credit in your EIN to getting credit immediately immediately through vendors, stores within 90 days, and Visa, MasterCard cash credit cards within about 4 to 6 months. So another benefit of business credit is it's not connected to your personal credit report. So you can be approved without a personal credit check. Now, when I say this, people immediately are skeptical. As a matter of fact, I had somebody that just emailed me yesterday and said, hey, look, if this business credit thing is for real, I'm interested because I had a Chapter 13 bankruptcy, my personal credit's a mess, and da da da. And my response was, please no, I didn't invent business credit. The truth is, business credit's been around longer than consumer credit ever has been, decades longer. Dun & Bradstreet, the oldest business credit reporting agency, has been around over 10 years before TransUnion and the consumer reporting agency showed on the scene. Business credit is completely real. There's no successful company in this country that doesn't have it. Everyone actually does. This is why big companies like Microsoft or Apple or Walmart, this is why their owners are not guaranteeing their business debts, because the business has built its own credit profile where it now on its own can get credit based on the EIN, not the business owners. Walmart, as an example, has 513 trade lines on Experian. They have a $50 million high credit limit on their business credit account. So you have to know with business credit, first of all, any business can build it. And one of the huge benefits is it's not linked to you personally. It's not meant to be. The truth is, as an entrepreneur, your business is meant to have its own credit. It's not meant to be driven by your credit. It doesn't work that way. Your personal credit's not enough to drive a business. So what happens is with business credit, it's not linked to you personally. It's not linked to your social. As a matter of fact, if you follow the steps I'm going to tell you, you could leave your social security number off of the application and still get approved. So there's no personal credit check because you're not even supplying your social. They can't pull your personal credit. And another benefit of this is that these accounts don't report to the actual consumer reporting agency. So if you get a Staples credit card, a Lowe's, a Home Depot, these do not report to the consumer reporting agencies. Business credit that's linked to your EIN reports to the business credit reporting agencies. So this is a really, really, really big deal because that means that when you inquire, there's no inquiries on your consumer report. Your consumer credit report and scores aren't affected negatively with business credit because you're not providing your social. There's no inquiry. Nobody's looking at your personal credit to make the lending decision. And better yet, as you use your credit, your consumer credit score doesn't go down. In the way the FICO score works, 30% of your score is based on utilization or how you use your credit score, what percentage of your credit limit you're using. So if you use your social security number to get credit cards for your business, as you utilize those credit cards and put more than 30% of the limit on the card, you hurt your scores. You don't want that. With business credit, you could use your business credit, max out the accounts if you need to, and you won't have even a 1-point effect on your consumer scores because, again, none of this credit even reports to the consumer reporting agencies. So another benefit of business credit is that per SBA, credit limits are 10 to 100 times higher than that on personal credit. And the truth is, that's just a benefit across the board. I always reference SBA for the statistic because SBA is the one that mentions it, but it's also well known in the business credit space. The bottom line is you can get a lot more money with business credit than you can get with consumer credit. If you have a Staples credit card for $2,000, then in the business world, you're probably going to get approved for $2,200 to $20,000. For example, Dell, the way that we help customers build business credit, Dell typically approves our clients with a $10,000 limit account. Most of you, I would say probably all of you on this call, none of you actually have a $10,000 credit card account on the consumer side with Dell, no matter how good your credit is. And there's a reason for that. You don't need $10,000 worth of credit at Dell. But if you have a business, you do. Okay, I had a business where we had 12 computers, 14 computers in the office. So when you need to buy 14 computers, you need a lot more borrowing capacity. And this is why business credit's this way. Businesses have a need to use more money than consumers do. This is why limits are so much higher on business credit accounts, which also provides a really nice benefit for you. And this also means you have personal credit cards at stores. Now you have a second card at the same stores for your business. So this is why I like business credit. I mean, you double your borrowing ability. If you go into Target right now, let's say Walmart. You go into Walmart and you get a credit card from them. Then you go in the next day and say, I want to get another credit card. They'll tell you no. They'll say, look, sir, ma'am, you can only have one credit card with us per individual. But if your business goes and applies for a Walmart credit card, it will get approved. So now you can have the same Walmart card that you've had personally, but now you can have another one for your EIN on the business side. So I like to say it doubles your borrowing ability because you can now have a personal and business account at these places, but it more than doubles your borrowing ability because remember, you're going to get 10 to 100 times the limit of what you're used to on the consumer side. So these two put together really mean that you're typically going to get approved for way more than double of what you're going to see with just your consumer credit alone. And you won't need collateral, cash flow, or financials to get it. And that's another real beauty of business credit. You cannot go into your bank without these three things, period. You can't do it. You can't get an SBA loan. You're not going to get a big bank loan unless you have collateral, cash flow, and financials. Okay, but with business credit, you don't need any of those things. This is why it's perfect whether you're a startup, whether you have good credit, bad credit, collateral, no collateral. It doesn't matter what your situation is. Business credit's a catch-all because everybody can get approved for business credit regardless of having cash flow financials or regardless of what your personal credit is. Another benefit is all lenders look at your business credit reports to decide approvals. And I was talking to somebody the other day. I was hoping my client would be able to get like an SBA loan. I said, well, first of all, SBA says right on their website that you have to have good personal and business credit to get approved. Your client doesn't even have business credit. So that would exclude them right then and there. All lenders look at your business credit. Even if you go to an on deck of the world and try to get a cash flow financing loan, they look at your business credit to determine your approval. But here's the thing. When somebody pulls your consumer credit, they send you a letter in the mail telling you if they denied you. The Fair Credit Reporting Act requires that. In the business world, there is no Fair Credit Reporting Act. So banks can pull your credit all day long and never tell you that they're doing it, never tell you that that was the reason they denied you. They don't need to, they don't have to, they don't do it. But that doesn't mean that they don't pull it. Every single bank pulls your business credit when you apply for business cards and financing. You need to know this. And if your business credit's not in line, then your chances of getting really good credit cards at your bank loans are non-existent. You've got to build business credit to get to those levels. And another thing to know is anybody who wants to can easily and cheaply look at your business credit. Okay, this means that your clients, your prospects, even your competitors can easily see your business credit. They can see how many accounts you have, what your high credit limit is. They can see how many employees you have, the size of your company, the amount of revenue you have. This is public knowledge. See, in the consumer world, they need something called permissible purpose. The Fair Credit Reporting Act requires that someone have permissible purpose to pull your credit, which means they need your permission. But in the business world, there's no such thing. Anybody can pull your business credit. As a matter of fact, when I was telling you I got an email from somebody yesterday that was skeptical on whether or not business credit existed, my advice to him was go to Dun & Bradstreet and pull your own report. You don't need me to tell you. Your business has been around for 7 years. Go to Dun & Bradstreet, pull your own report, and you'll see right in front of you that you actually do have a credit profile. The truth is, I could pull his report. You could pull his report. I could pull your report. Anybody who wants to can cheaply and easily get your report. I was just talking to one of our clients the other day. He worked out a deal with Equifax, I think, where he pays $15, actually $14.95 for client reports. Just a guy off the street. He pays $15 to get business credit reports on any business that he wants to get them on with no permission required. You need to know that banks look at your credit to determine approval and that anybody else who wants it can look at it. You also should know that when done properly, you can build business credit without a personal guarantee. This is what business credit's for. There's no reason for you to run a $5 million company and be liable for all your business debts. That's crazy. If that's what business life was about, nobody would ever run successful businesses because there's no way that successful entrepreneurs are going to put all of their family's finances on the line and in jeopardy, especially when their business starts growing to, gargantuous levels. So the bottom line is business credit, really one of the fundamental benefits is that you're not personally liable for the debt. So if you ever default, they can come after the business, not you. So if you default on a $50,000 credit card, they can pursue the business assets, but they can't come and touch any of your personal assets. But what most people don't realize until it's too late is that's not the way it works if you're not using business credit. If you go and say, I want a card for my business, and you give them your social and you personally guarantee that debt, then, God forbid something happens to your business, even if it's out of your control, they're going to come after your personal assets, your home, your cars, your stocks, your bank account. They cannot do that with business credit, which is a huge benefit. Now, having business credit also increases the value of your business. I just told you anybody who wants to can see your business credit. So one of the basic things that anybody who wants to buy your business is going to do is pull your business credit report. They're going to look at the financial health of your company because they can easily do so. So when you have business credit, it radically increases the value of your business. I can tell you because I've actually bought and sold many businesses. And this actually does come into play because, again, if you could choose between company A and B to buy, and A has $20,000 in available credit and B has none, well, then if everything is equal between those companies, you're going to go with the one that has the most amount of credit. All people that would buy businesses look at this the same way. So most importantly, every highly successful business in the United States has business credit. Okay, and this is something I really already mentioned. I've got webinars on my actual YouTube channel where I go through and show you the reports of some of the biggest companies out there, the biggest privately owned companies, Flying J and Walmart and Publix. I show you the actual report data from them where you can see that all of them have successful business. So the bottom line is, and how I say it, and I might have this written later on another slide, is this. You can get business credit regardless of your size. It doesn't matter. You can get business credit without being big, but you can never get big without business credit. It's impossible. At some point, you have to start using the business to finance the business. You can only grow to a certain level without that. So you don't have to be big. This is actually what I was getting ready to say. You do not have to be big to get business credit, but you do have to have business credit to get big. And this is one of the biggest things you need to know about business credit. And the last thing I'm going to cover regarding benefits. You cannot get really big and successful without business credit. It's impossible. Okay. And you can never show me a company that has, because we easily can go in and pull credit on any business we want to. We often do. We look at the biggest privately owned. We look at the biggest public. There's none of them that exist in the top 20 that we've ever looked at that don't have business credit, because they get to a point where eventually they have to get business credit to get big. This is also why mostly big companies have business credit and small companies don't. You see, a typical small business doesn't know about business credit. They don't know about business loans. They're not trained in college, in high school. You're not trained these things. So as an entrepreneur, you might know what you know and you're running a business doing it, but you don't know everything else that's involved. That's why you have a lawyer for your law stuff. That's why you have an accountant for your accounting stuff. You're not supposed to know these things. So an average small business owner just doesn't know how to build business credit. That's why they don't have it. And bigger, larger companies end up hiring CFOs, chief financial officers, that do know about business credit. And this is why they start building it for the company. So eventually your company gets big enough where you get a bookkeeper, you get a CFO, you get a CPA, and they step in and start building your business credit, especially if they work for you, not somebody you hire as a third party. And that's why bigger companies have business credit, because they have CFOs that understand it and smaller companies just don't. But what's important to know is that any company can build business credit. I don't care if you're just opening your doors today. So let's talk about what not to do before we talk about what to do. You can't start building a consumer or business credit profile or at banks and stores. I get this all the time. All the time. People say to me, business credit doesn't work. I went into my bank and applied and they said no. Well, of course they said no. You have no credit established. So this is one thing where business credit and consumer credit are exactly the same. If you go into Target and you've never had consumer credit before, somebody pulls your social and you're what we call in the lending industry a ghost. You don't exist. You will not get a Target credit card. If you go into your bank and apply for a $2,000 credit card and you have no credit, you will not get approved for a bank credit card. But on the consumer side, if you went and got a secured credit card, and then you went to your bank and went to Target after it reported and you had a score and you had some trade lines, then you could get approved. Well, that's exactly the same in the business credit world. You cannot go to a store, you cannot go to a bank and apply to get initial credit. You will get denied. I promise you, 100% of the time, you're going to get denied. Instead, you have to start building it with vendor credit. So if you go into a place like Staples with no credit, they're going to deny you credit. If you go into your bank and apply with no credit, they'll turn you down. But if you go into either with a well-established credit profile, you'll get approved. The key here is not to apply until you have credit built. That's it. This is how business credit works. It's also how consumer credit works. There's a place to start. If you don't start in the starting place and you start to jump ahead to store credit and cash credit, you're going to get slapped back down and denied. But if they look at a credit profile and they pull your EIN and they see you have trade lines, you have a credit profile, you have a credit score, then you get approved. So the key to getting cash credit is that you've got to have a credit profile and score established to be able to get cash credit. They have to pull your EIN credit, see something there, and then they will start to approve you for those things you look for. Yes, what I just said is you need credit to get credit, both on the business side and on the consumer side. These two are fundamentally the same here. And I always relate this back to consumer credit because so many people don't seem to understand this in the business world, but it really was the same in the consumer world. When you started building credit, you went in, you got a cosign loan, you got a secured credit card. That's how it all began for you. So on the consumer side, most use secured credit accounts to start building the initial credit. In the business world, we do this with vendor accounts. Trade vendors who will give you credit with terms like net 30, which means you got 30 days to pay them back, and they also report to the actual business credit reporting agency. So both business and consumer side, you need credit to start getting credit, but on the consumer side, you start with secured credit cards, and the business side, you're starting with these vendor accounts, which brings us to step one. Before you even start applying, actually it doesn't, it brings us back a step. Before you even start applying for any credit, you've got to make sure that your business is actually going to get approved. Okay, when you have credit established, your credit's reviewed and used as the main determining factor. That's how it works. Once you have credit established, they pull your credit based on your EIN. That's what they use for the decision. But here's the problem. If you have no credit right now, then the information you put on your application is what's used to determine your approval. That's very important to know. When you start building business credit, you have no credit profile for them to look at to approve you. You don't want to give them your social and use that. So instead, they're going to look at everything on your application. They're going to break you over the coals on what's on that application because that's all the data they have to make their approval decision. This is why the first step in building business credit is to ensure your business is set up credibly. You have to make sure you meet these guidelines before you even think of applying. By doing this, you can ensure you meet the credit issuer's approval standards before applying, so this drastically improves your chances of actually getting approved. So take a look at some of the things that lenders look at. Your business address. It cannot be a P.O. box or UPS address. It has to be a home address. Excuse me. It cannot be a P.O. box, UPS, or home address. They will know it. Our finance suite has the same technology lenders use. If one of our clients enters a home address, we throw up an error and say, you cannot use this address. It's a home address. Banks will deny you. You need to have an actual business address. You can't use a P.O. box. For sure. You can't use a home address for sure. UPS address, in most cases, is going to get you in trouble. So what's the solution? You go through a company like Regus, R-E-G-U-S, Regus. Regus offers virtual addresses where you can get your mail, but you don't have a physical office, and they will make sure that you meet that requirement so you can get approved. Your phone number, it's got to be a business phone, can't be a home phone or cell phone numbers. Lenders will turn you down if so. You need to have a professional website email set up, period. Okay, you're going to put your email, you're going to put your website on the application, they're going to look at it. You can't use out partying at yahoo.com as the email address on your application, obviously that'll get denied. They want to see something like what I have, Ty at creditsuite.com. That's the same as our domain. Our website's creditsuite.com. My email is Ty at creditsuite.com. Real easy, real cheap to set up through a company like GoDaddy. You should have proper licensing. Don't even think about trying to get business credit if you're an unlicensed contractor, for example. You've got to have your EIN number, your entity set up, your business bank account. These three things are complete basics of starting a business in order, basically. You're going to set up your entity first with your state. Then you use the entity setup to go in and get your EIN. Then you use those two to get your bank account. These are three basic steps that anybody that starts a legitimate business goes through. You should make sure that you do them. And when doing them, you need to make sure your business name is the same on everything. All your licenses, your DBAs, your bank statements, it needs to be exactly the same, including any DBAs. Okay, so by this I mean if your business name is ABC Company, doing business as CBA Corporation, then you need to have that whole thing written out on whatever you're applying for. This is one of the biggest reasons people get denied business credit, because their company name is like ABC Company doing business as CBA, and they put CBA on the application and the lender can't find them because they're using their DBA on the application, not their full company name. It's a big no-no. It'll get you denied. The lenders will not go digging for your info if they can't find it. This is why all of your stuff needs to be congruent. You should have a toll-free number and a fax number. Okay, nowadays most legitimate businesses do. And you can get your phone number be your fax number now. If you go to a RingCentral type company, you can get a phone number, fax number, toll-free number all in one for usually less than $10 a month. But you need to have a toll-free number unless you're in a local area, for example, such as, delivering pizzas. So basically every field on the application should reflect that you have a successful and established business. Remember, this is what's solely looked at to determine your approval. So your business must be represented in positive and credible light initially to even start step 2 of getting your first credit established. So now that you're set up credibly, you can qualify for new credit that reports to the business credit reporting agencies. But there's only a very small percentage of vendors who will actually approve you at this stage of the process. And I do not know why I have graphics covering my words, so I apologize in advance for that. These are starter vendors, and they will all have you buy something first, then they'll give you credit. So this is how it works. So when you start building business credit, you start with starter vendors. These are people that will say, if you buy from me, I will give you credit. And the credit I give you will report to the business credit reporting agencies. This is how business credit initially started. So let's take a look at some starter vendors. Quill. Quill sells office supplies. Uline, they sell shipping supplies. Reliable sells office supplies. So all of these type of companies will require you place 2 to 3 orders before first getting approved for credit with them. So you go into Quill and you say, Mr. Quill, I want to buy $50 worth of stuff and I want to use your credit to do it. And they say, okay, go ahead and apply for credit. You apply, they pull your EIN credit, they see you have nothing, they say, we're not going to give you credit at this time. And you say, I still want to buy the $50 worth of stuff. And they say, here you go, you bought it, you paid for it, good job. Then you go back again and say, Mr. Quill, I want to buy another $50 worth of stuff. I'd like to apply and get more credit. He say, okay, no problem. We'll go ahead and look at this. Go ahead, type in your EIN. They pull your EIN credit. You got none. They say, oh, look, Mr. Customer, we appreciate you applying, but you're not going to qualify. So be it. You say, okay, I'm going to buy my $50 worth of stuff. Thank you, Mr. Quill. I'll be back. You come back a third time. You say, Mr. Quill, I want to buy another $50 worth of stuff. I want to apply for credit. Now, they're typically going to approve you, because what they're seeing is they're saying you still have no credit established, but you're obviously wanting to continue to do business with Quill. So Quill on the second or third application will say, okay, we're going to go ahead and approve you for a $500 or $1,000 or $2,000 line of credit. It's net 30 terms, which means if you put $2,000 on it, you have 30 days to pay us back, and we're going to report to Dun & Bradstreet and Experian. That's how this goes down. Now, if you have even a little credit established, these places will probably approve you without 2 or 3 orders. But if you have no credit established, they might make you make 2 or 3 orders to actually get approved. So you apply for the credit, you get denied, you still buy, and you buy about $50 worth of stuff. And then if you try it again and again, if need be, on the second or third time around, you'll typically get approved. So some other starter vendors, Lachlan and Associates, Monopolize Your Marketplace. These will require you buy their services and they'll finance those. So they're not saying, okay, buy office supplies. They're saying we sell a marketing program for $500, and if you buy this $500 program, we will finance it and report your payments to the reporting agencies. So the first group of companies I told you, the way they work, you could buy whatever, office supplies, shipping supplies, you need that stuff all the time. You could buy small increments. These are services that are a little bit more money, but if you buy the service, they're upon immediate purchase of the service is going to approve you for credit. Very rarely, if any, do we see anybody get denied. They've made a name for themselves by offering services and giving people business credit. It's pretty smart because not a lot of companies do this. So their niche is to give people services and report the services using business credit. This is why so many people use these type of companies. So these are the type of companies that, again, you don't need to necessarily, keep coming back and buying stuff. If you buy their products and services, they'll approve you. And the benefits is that you won't need to place these 3 orders that you'll have to do with the other ones that I actually showed you. So once approved, you want to use that credit, pay your bill. Once you pay your bill, it takes about 3 reporting cycles max for the account to report. So it's about 30 to 90 days for the accounts to report to the business credit reporting agencies. You should have at least 5 of those type of accounts approved, used, reported before you move to the next step of getting store accounts. That's the magic number, is 5. So again, you got to keep in mind, business credit scores only based on one thing. For example, the Paydex score, how you pay your bill. So in order for you to get the credit, you have to get the credit, use the credit, pay the bill. The paying of the bill is what gets the account reported. So remember those steps. Get approved, use the credit, pay the bill timely, as early as you can, because the earliest you pay the bill, the higher your Paydex score is going to be. So you want to do that. You want to then check your credit reports. You can go to our website if you want, creditsuite.com. If you click on Business Finance Suite at the top, or Finance or Business Credit at the top, or Finance Suite at the top, you can scroll down and find a place where we have, actually, you know what? If you go to creditsuite.com/reports, REPORTS, reports, you'll find links to get your Dun & Bradstreet, Experian, and Equifax credit monitoring at a discount there. So it's creditsuite.com/reports. You should have access to your business credit reports to see these accounts being built. When you have 5 trade accounts reported, then you can apply for revolving store credit. Do not try to get store credit without 5 accounts. Remember, I told you, if you don't have enough established credit, they will not approve you at stores. Once you've done this, now you can move on to revolving store credit accounts. Okay, I'm not going to give you one massive list of these because pretty much every single retailer that offers consumer credit cards offers business credit. Best Buy, Amazon, Walmart, Lowe's, BP, Chevron, Nordstrom's, just about every retailer, Sam's Club, Costco, just about every retailer you could think about offers these business credit cards also. So some stores like Home Depot, Staples, they require you have a lot of time in business or a lot of revenue. They might require you have $3 million in revenue and 3 years in business. A lot of people try to start at Staples, and Staples is not a place to start. They're a horrible place to start. And this is where people get convinced business credit doesn't work because Staples won't approve them. Staples won't approve you unless you have a lot of revenue, a lot of credit established, or a long time in business. But of these other sources I mentioned, Best Buy, Amazon, they don't have those kind of requirements. Home Depot and Staples are the 2 most notable companies that actually do. The key to most store credit are that you have established trade lines on your business credit report, that you have an established credit profile, and that you have an established credit score. There you go. Most retailers, to get credit at Office Depot or Lowe's or Amazon or Walmart, they want to see 3 things. You have established trade lines. Those 5 accounts I told you should have reported. Next, you have a credit profile. It's kind of one and the same. Once you have 5 trade lines, then you will have a credit profile established immediately. And once you have the credit profile, then you'll also get a credit score. And those are the 3 things they're looking at. They're going to pull your EIN credit. Does this person even have trade lines? Do they even have a credit profile? Yep, they do. And what's their credit score? Up, it's an 85 paydex. So not only do they have trade lines and accounts reported, but they're paying their bills early. Great sign. Let's give them approval. As a matter of fact, a lot of the systems you apply through will automatically approve you without even speaking with somebody when you meet those requirements. So now we're on to the final step, the whole purpose of this actual show today. How do you get to the final step of cash credit? Well, once you have 10 total accounts established, then and only then will you start to get real cash credit. So remember, it took 5 accounts to get you to revolving store credit. Now you have 10 accounts total to get you to cash credit. So these are Visa cards, MasterCards, Amex cards you can use anywhere. In your business name, linked to your business EIN, and in most cases, not requiring a personal guarantee. Okay, so these are cards that you really want. You want cash credit. You want to be able to go spend $5,000 wherever you want. If you have a, let's say, Lowe's credit card, you can only spend that money at Lowe's. You can't go to Home Depot and buy stuff with it. But with these kind of cash credit cards, you absolutely can do that. You absolutely can go into any store and buy what you want. I apologize in advance because I know my slide got cut off here. So you should also have one of those store accounts with a $10,000 high credit limit. So those are 2 requirements. You want to get cash credit cards. I'm going to tell you the 2 things it takes. 10 trade lines on your business credit reports. I just told you how to get the 10. I gave you enough retailers and vendors to get 10. Then one of those needs to have a $10,000 high limit. It's not a stretch. I just told you earlier, Dell will give you this. If you follow the steps I've given you and you get some established credit and go to Dell, Dell is notorious for giving out $10,000 high credit limits. So those are the 2 requirements. One account has to have a $10,000 limit. You need to have 10 accounts. Then you can move in to cash credit. Now, cash credit are actually not easy to find at all. Okay, Home Depot has a great one that you can apply for. Once you meet these requirements, they have an actual cash credit card you can apply for. So does Sam's Club. Even Racetrack offers a fleet card that you can use absolutely anywhere. Okay, so I just gave you a few great sources for cash credit also. And you can check with your bank to see what they offer. If you meet these requirements, if you built the trade lines, you built the profile, you built the score, then you should qualify now even at your bank. And there's also some other sources. Your approval limits are going to be about the same as what your other accounts are. So this is why I'm telling you, don't go to apply unless you have a $10,000 high limit. If you have a $10,000 high limit card like Dell, then you'll typically start to get Visa MasterCards approved for business credit that are $5,000 to $10,000 limits. The limits will mimic whatever other trade lines you have. So again, if you wait till you have a $10,000 account, that's really the key to getting higher limit accounts here when it comes to cash credit. Just keep in mind, do not apply for any of this credit and use your social security number. Don't do it. If you do this, they're going to pull your personal credit to make the lending decision. It's going to happen. So if you have credit problems and you don't want them to pull your credit, do not put the social security number on the application ever. And you'll be personally guaranteeing the debt if you do put your social on the app. Not something you want, so you cannot put that social on the app. No matter how much credit you build, you'll still always get applications that ask for your social. I get this question all the time. Ty, I've taken the steps that you outlined, but I get an application and there's a social field on it. The social field will always be there on the application. It will never go away. It will always be there. You just need to get used to not putting the social on the application when applying for credit for your EIN. It's never going to go away. The social field is always going to be on the application. You just need to get used to not actually filling in the social. It will still needed for bank loans, larger credit lines. But it's not going to be needed for these credit cards, not even high limit credit cards. So don't go into your bank and apply for an SBA loan and say, oh, Ty Crandall said, do not give you my social. No, don't get me wrong. If you're getting higher dollar bank loans and higher dollar credit lines, they're absolutely going to ask for your social. You're absolutely going to guarantee that debt. But when we're talking about a Visa card, a MasterCard, an Amex card, when we're talking about, a Staples card or Home Depot or Lowe's or Best Buy or Costco or BP or Chevron, none of those need your social, although larger bank loans still will. Building business credit fundamentally isn't that different than building consumer credit, really. You start building your credit using vendor accounts. Okay, the next step is once they report, you have a credit profile and score, and you use that to start getting revolving store credit cards, as we talked about. And then finally, once you have 10 of those kind of total accounts, you start applying, getting cash credit. And you do all this leaving the social security number off the application, and then they'll pull the credit that's linked to your EIN. And if you do this, well, then you'll be able to enjoy building a business with access to money. And that's what business credit really is about, is using other people's money to grow. And I know on the consumer side, we like Dave Ramsey and all these people that say, don't go into debt. I'm with you. I don't like debt on the consumer side. But the truth is, in the business world, you're either going to use your personal money to build the company. You don't usually have enough profits initially to do it, or you're going to use your business money to do it. So you'd rather use money that's linked to your business than not use money that's linked to you personally. Those are about the only two choices you typically have to get started in the business world. So you might as well as use business credit, use other people's money without the liability, without the guarantee, without the credit check, and get the benefit of getting these really, really, really high limit accounts, including store credit accounts and including cash credit accounts. So that's going to go ahead and wrap it up. I walked you through a quick summary of exactly how to build business credit. And again, you can type in my name, Ty Crandall, onto YouTube. You could type in business credit on YouTube and you'll see my videos all over the place. You'll see my channel. If you subscribe there, you'll get notices whenever I put up new content. There's detailed webinars there. There's detailed podcasts on my iTunes channel that outline each of these steps. I have hours and hours of training on the credibility, hours and hours of training on revolving accounts, on vendor accounts, on other accounts. So all the information you need, if you feel this wasn't enough, is accessible to you out there at no cost. Plus, don't forget to grab the business credit building checklist. It's absolutely free for you. So you go to creditsuite.com/business credit building checklist. It's an absolute free resource for you, and it's a checklist that will help you walk through the actual steps of building your business credit. So again, went a little bit over the actual 40 minutes I was expecting, but hopefully you got a lot out of this today. I walked you through a summary and told you exactly the steps that if you follow, you could build business credit no matter what your current situation is now. So the next step is to take action, to start working on getting your business credible and then start getting your first initial vendor accounts. So I hope you got a lot out of this. If you have any other questions, feel free to send us an email, info@creditsuite.com. And I really want to thank you very much for taking the time to spend this time with me today. So thank you very much. Have a great day.